Hello everyone. Just let me know if I'm audible. Yeah, hi Rohan, hi Arindam, hi Supriya, hi Sneha, hi. So, today we are going to see about what is DeFi and how does it work. What are its use cases and what you need to know and all. How many of you know about DeFi first? I would like to know from the audience, what all you know about the DeFi and what would like to know more about the DeFi. Like, what are your expertise till now? That I would like to know first. So you can put it in the chat and let me know. It's banking on blockchain. Yeah, some sort of that. You just know the basics. Okay. To make payments easier. Yeah, you can say, but you can also say it like to make the money work correctly. But want to learn how it works. Yeah, sure. Don't know much to learn about it. Yeah. And now we are starting about it now. Welcome. The masterclass of decentralized finance is going to start. And before we start anything, normal disclaimers like we are not giving any kind of financial advice to anyone, and anything you do with your money you should do with your own research, and you should take your all the decisions wisely. So like whatever you are going to learn today is just an knowledge which you are sharing, and how does it work behind the scenes, and what is DeFi. So yes, like what are current financial systems work like? Like current financial systems are like there are centralized banks, there are centralized governments which control the money, which you don't have any control over your money. They control it. Like for example, money in your bank, in your account, is not with you. It's in your account. It is the figure itself. But the money in your account, which are deposited in the bank, it's used by the bank, like giving loans to the users, or giving loans, yeah, or investing in other instruments to earn interest, and a part of interest is given to you. So in this way, your money is used by the banks, and they earn the interest into it, and a part of it is given to you. You don't have control over the money. So what happens is like if there is some issue and the bank loses all the money, then your money is gone and you can't do anything of it. This is how the most of the banks go bankrupt and all. And one more thing is like the flow of the money is not in your control. Like if government thinks that today we would like to demonetize some currencies, then you can't do anything. That then government has decided it will be demonetized. DeFi is the biggest use case in future. Yeah. It's the biggest use case in future, and it's also uh, ongoing timeline. Like we look at, like we will see today, like what is the timeline in which DeFi is working right now. So like these are the 2 points which kind of financial system lacks. Like users don't have the control, and users don't have the control of the money and the flow of the money. Like until and unless you have 10 rupees note or 100 rupees note in your hand, you can't say that it's mine, or like you have the control over it. If it's in your bank, the bank has the control and they can use the way they want. And they also put like limits and all while withdrawing, and also there are too much of restrictions, and the restrictions can be changed time to time by the bank, by the government, by the RBI, anyone. So, on the other hand, we have decentralized finance. Decentralized finance is the financial instrument, has the financial instruments which are relying over the blockchain, and they give you the services like exchanges, brokerages, and all. And These are created using these smart contracts. Like a smart contract is a piece of code, like it's a contract written in a computer language, and it has set of rules. And once deployed on the blockchain, the smart contracts, once deployed on the blockchain, cannot be changed. So, like the uh, projects which are on blockchain now, they will remain same till further till endless time. Like they will never change. Yeah, uh, the organization working on that product can upgrade it and put new things over it, but the things which are before you cannot change. If I take example of Uniswap, uh, the product had a version 2 before, but now they introduced a version 3, and which is way better than version 2, but the version 2 still remains there and you can use it, and the version 3 isn't other upgrade to it, and you can use version 3 also. So the version 2 will never go down and will never stop working. It will still work until and unless people have trust in it and people are using it. So this is how decentralized finance works. Like if you do one thing, and you cannot stop it. And this is how decentralized finance works. And the best way how decentralized finance can be explained is like uh, here are no banks. Instead, there is a piece of code. Like I said, the smart contracts. These are the piece of codes that are running, and they act as a bank. So smart contract has written like if someone wants to transfer, then what will happen? If someone wants to deposit, then what will happen? Someone wants to withdraw, what will happen? How can user check his balance, and etc. Like they don't want you to trust them. They say this is the code, read it, how it flows, and you can work over it. This is how different financial instruments over blockchain work, and together they are called as decentralized finance. So there are three main things which you need to know that are important to build a decentralized financial instrument like cryptography, blockchain, and smart contracts. Cryptography is like encoding the data. You cannot put the huge amount of data directly on your personal data directly on websites and all. So what we do is like we encode the data with a private key, and it is put on the database like on the blockchain, and you can access it and no other person can access it, but it's available for all. Everyone can see the encoded data, but if you want to decode the data, you need the keys to decode it, and there is a long algorithm which works behind the hood, and it has data to be encoded and decoded. The second is blockchain. Blockchain is the decentralized ledger in which you can do transactions, you can uh, uh, operate various decentralized applications over it in a decentralized manner, and no one has control over it, and all the data is available for the users. Then next part comes is smart contract part. What smart contract does is like it helps to list out the rules how the product will work. So it written in programming languages like for example Ethereum uses Solidity. Solidity is a programming language, and you can write smart contracts for Ethereum blockchain over it. For Tezos, you can write using Python. Then for Solana, you can write using Rust programming language. In that way, it works. So need to write the piece of code like if I'm building a bank over a uh, blockchain, then I need that the bank should do this, the bank should do this. If someone wants to deposit the money, he will deposit in this manner, and everything will be written there. And it will be put on the blockchain, and it will remain forever on the blockchain, even if there are if after 1,000 years or 2,000 years, until and unless each and every node in the blockchain is isn't closed. So like if all the nodes in the blockchain close, then the blockchain will close, but it's very highly impossible because there are millions of nodes in the blockchain which are working on the data, and due to which the blockchain will be long lasting, and it will never stop working, and your smart contract over that blockchain will be also working over it. Until here, do you have any questions like whatever I have explained? If you have any doubts, you can ask me now. And if you are understanding everything, then you can also say all clear or I'm clear and I'm understanding it. No doubt so far. Yeah. So let's go about this next time. Next thing is five pillars of DeFi. The five pillars, like what are the different five pillars on which blockchain, decentralized finance over blockchain is built? Like what makes them more useful to the users? The first are the stable coins. What are stable coins? There are two types of stable coins I can say. One are backed stable coins and one are backed by stable coins. Like for example, USD is United States dollars. It has some value. So any token representing that one USD on over the blockchain will be called a stable coin. So like the value of that stable coin will never change. Now, for example, if you go on any decentralized exchange and see that the price of USDC, USDT, then DAI, they are the stable coins which are pegged to US dollar. That like what it means is that one US dollar is equal to one token is equal to one US dollar. So any stable coin will be pegged to one asset. Like for example, your underlying asset is one US dollar. So one US dollar is always equal to one stable coin, the coin. Then second pillar will be the borrowing and lending. What happens in borrowing and lending? You know that like mostly our banks also do in the same way. Like if someone wants some loan and all, the person will borrow it from the bank, and it will like put some collateral in the bank. Like for example, I want loan for something like for education and all. Then they can ask for collateral, and I can keep my house on collateral or something on collateral and take the loan. And after that, I have to pay interest on that loan and repay it back to the bank. In this way, borrowing and lending works. Like the lender gets the interest and borrower gets the product they want. So this is one of the pillar in the DeFi. The third is decentralized exchange. So decentralized exchange, what happens in decentralized exchanges is like there are hundreds of coins on the blockchain. So like I want to take a coin. Like for example, when you go to exchange, cryptocurrency exchange like WazirX, CoinSwitch, Kuber, CoinGCX, etc. So what will happen there is like you can give your Indian rupee and take any cryptocurrency. So what happens is like you are doing an exchange of tokens or currencies. Like you are giving your fiat currencies and you are taking your decentralized or cryptocurrencies. Then this is called as exchanges. So the exchanges like WazirX, Binance, then CoinSwitch and all, they are centralized exchanges. Like they are controlled by the central authority, and they can manipulate any decision in the uh, exchanges and that. Like you can see currently, like some of the exchanges have stopped accepting the money. Like they don't support UPI, or whenever they want, they will to start the payment again. In that way, like users don't have the access that when the payment when they can make the payments and they can't. Like there are some faults. There are some issues in the centralized systems. So due to which this becomes difficult. Can you explain margin trading? Yeah, like yeah, I don't have much deeper knowledge about margin trading and all, but I think there are two types of trading: spot trading and margin trading. In spot trading, what happens is like if you are trading a token with another, you buy it at the spot price, and in margin trading, like you define the price. Like I would like to buy the currency. Like I'm giving 5 rupees and I want to buy this token for this amount. Like I want like buy Ethereum I'm giving my 1,000 rupees and I want 0.005 Ethereum up for it, and you will put an order in the trade on the trading platform. Then the order gets listed, and if there is some buyer who is willing to buy by willing to sell the Ethereum at that amount, then the seller is matched to the buyer. This is how the margin trading works. So, like in spot trading, you don't have to define the price that you want to buy or sell. There is a particular price going on in the market, and you can sell at that price, and you will get the seller quickly. But in margin trading, what happens that you decide at what price you want to sell or buy, and the platform will match it with the buyer or seller, and then the trade-off takes there. I think this is the basic I know about margin trading. Hope I'm clear. Then insurances. The insurance is one of the below DeFi. Like if you want to insure something, then you pay interest or you pay the premium for it. Then whenever there is some destruction or if you lost that thing, the for example a car. If you take a insurance for a car, then you have to pay premium for it to the banks or the to the exchanges, and then when after some if there is some accident or the car gets lost, then you can uh, take the insurance from the company. Like you can ask the company for the insurance and they will pay back the money of the insurance what insurance happens. Insurance is decided when you take the insurance. Then last is margin trading. As I explained right now, margin trading is like you trade with the users. Like I'm giving you the INR and I want Ethereum or I want Solana, there's etc. coins. These are the trading five pillars of DeFi. So like before knowing more about DeFi, I think we should see how DeFi has evolved and what was the history before, like how DeFi started going up. Until then, if you are in doubts, you can ask me. Just keep posting your doubts in the chat, like what you want to know more, and I will like cover it as I'm reading the chat and as I'm explaining. So next thing is history. So sorry. Oh yeah, the history or the DeFi timeline. The first in 2000 Bitcoin was launched. So can you explain a bit more token related concept with DeFi? Or token related concepts, like which concept do you want to know? Can you specify? Like we are going to like see some of the uh, use cases of DeFi also, like how DeFi is working and all. But other than that, can you like tell me what you need to know, what concepts you want to get familiar with, and I will let you know how it works and all. Okay, until then, the DeFi timeline. Acha, different types. Yeah, yeah, we are going to cover it. Let's go step by step first. Like in 2009, the Bitcoin was created. So, what was the main use case of Bitcoin when it was created? It was used for buying and selling, trade purpose. Buying and selling, I mean, like if you want to buy any good, like how we buy with Indian currencies and all. Like we give 5 rupees and you buy. You buy some biscuits and all in that way. It works like it was used like for buying or transferring to someone, like I can transfer to you that was the basic use case of Bitcoin in 2009. So like at any organization to work, there needs something like proper financial instruments to work in the DeFi world. Like there are some financial instruments like loans, then mutual funds, bonds, etc. in that way. So in 2015, Ethereum was created, and this was one of the most milestone, which was helpful to build a DeFi product. Like for example, when Ethereum was created, more people started building products on Ethereum because Bitcoin doesn't have the ability to build products over it. Like you cannot build an decentralized exchange over Bitcoin, but you can build over Ethereum because main purpose of building Bitcoin was to just buy use it as a currency to buy something, or you can send it to someone and take it. You can earn it in that way. But Ethereum was created to build products over itself. Like you can build your own applications over it, and people can use that applications in decentralized way. For that, Ethereum was created, and after that, new projects started coming up. Like Uniswap came, Compound came, MakerDAO came over Ethereum, which are some of the products on on Ethereum blockchain. In 2017, initial coin offering started. So, like you must be knowing what is IPO, initial public offering. Like if there is a some corporate company, which a private limited company which wants to go public, like it gives its shares to the public and it takes money from public in form in return of the shares. Like what happens is the public goes to the market, like stock market, and says, I want to list the public. I want to list my company in the public, and I want to offer this much of shares. So, like for example, I have a company and I have 100 shares of my company. So I will go to stock market of India and I will say I want to list my 80% or 80 shares of my company uh, on the market, like stock market. So this process is called as public offering, like initial public offering. Initially, I'm offering my 80 shares to the public, and then public can initially buy the shares, and I will get the money, and then public can trade the shares between themselves after it, and the price of the shares are dependent upon how my company will work. Like I'm taking the money from the public, and then I'm working on my company to grow, and as my company will grow, in that way the price of the shares will grow. In that way, initial coin offering happens. And what happens in initial coin offering is like I am building a product over a blockchain, and at the same time, I don't have a much amount of capital to build that. So what I will do is like I will present my idea to the public that this is my idea and what I'm building on, and I don't require initial capital for it. So I am offering my company has a native token called as the creator coin. Like then I will offer that creator coin to the users, and you buy this coin, and when you will buy this coin, uh, I will get the money from you. I will build my product, and then you can use the same coin to use my product itself. Like then what you will do is like if you like my idea, you will buy the coin, and I will get money to build the product, and you will have the coin. Then whenever my product will be built, then you can use that coin to use in my product, or else you can sell the coin in market. That if anyone wants this coin, if you don't need the coin, you will sell in the market, and if anyone wants this coin, then he will buy it, and then you will get the money returns out of it. Like at initially, if I offer one token for 10 rupees, and after 1 year you think the coin is useless for you, you don't need the product, so you go to market and try to sell it. And at that time, if my company is bigger, I have built some product and it's launched, then there will be some user who may need my product and he wants the coin. So he will buy the coin from you, and then he will pay like 100 rupees or to you, and he will buy the coin. Because the company has grown, the price will also grow. So the 10 rupees coin is now 100 rupees, and you will get 90 rupees out of it. In this way, initial coin offering happens. Like some small projects want some capital to build the product, they will offer the coins, and then you can buy from there. What are the different types? Yeah, we are going to see them. Then in 2018, Uniswap was launched. So what was Uniswap? Uniswap was like a decentralized exchange. So what happens in centralized exchange is like you put an order on exchange, the order is listed, then the buyer come, the exchange matches with you the buyer, and when the buyer is found, then you can trade the token. But in Uniswap, what happens is like uh, there is a pool, and in that pool there are like for example we take there are 10 people, and each one of them put two coins. Like for example there is a pair called as Ethereum and Bitcoin. They put 5 Ethereum, 5 Bitcoin, everyone in the pool, and there are total out of the 10 people, everyone puts. Then there are each one five. Like then there are 50 Bitcoins and 50 Ethereum. So what happens, like if I want to exchange my swap my Ethereum to Bitcoin, then I will give my Ethereum and I take my Bitcoin. So what happens is like in central exchange, you are dependent on if the buyer is there or not. You would like to wait for the buyer, like when buyer will come and he will buy your coin and he will give another coin which you want. But what happens in Uniswap is like there is already a pool created of the orders. You just want to give and take it. The transactions are faster, they are cheaper. Like there are higher rates on centralized exchange, but there are cheaper rates on decentralized exchange. In the same way, Yearn Finance was formed in 2020, and it works in a similar way. And at this period of time, there were a lot of uh, uh, trading happening. A lot of new coins were evolved, a lot of new projects will evolve, and they had a various different types of functionalities to it. So like this was DeFi and what it is, but what are various products over it? How does it work? And what are different types? So like uh, what we were doing right till now in the finance, what cryptocurrencies we were using, like what we were used to do, we used to buy the coins, wait for someone to tweet, and if the coin goes up, then we used to sell. So like this is like a big disclaimer for you, like don't like depend on any people for your money, like to go above something and all. Then like you will buy for cheaper, and if someone hypes it, then it will go up and you will sell. Like this was like a basic use case of cryptocurrencies over the exchanges and all till now. But decentralized exchanges changed these features and all. So like let's start by knowing that how does it work. So first, like we are looking at lending and borrowing products, like how why are they good in decentralized world but not like in centralized. So what happens is like when you want to lend some token, like you will go to the exchange, then you will say like I am giving, but like the rates are higher, the interest rates. Like if you want Bitcoin in exchange of Ethereum, so what you will do is like you will give the Ethereum, like, and you will take the Bitcoin. But how it works, that we are going to see. So what happens is in decentralized lending and borrowing, like if I want to lend you something, like I have 10 Bitcoins and I want to lend you, then give this, I will put this Bitcoins in the pool where they will be listed for lending, and there are some buyers like who wants to buy the Bitcoin. They will come, then they will say like I want Bitcoins. Like then what will do they do? They will keep their Ethereum as a collateral, and they will take Bitcoin for their use. So then what will happen is that they will use they will use the Bitcoin for whatever they want, and after that when the work is over, they will return the Bitcoin, and then the Ethereum that they have locked in the protocol, that they will then take out of it. So this is how the lending and borrowing works. Then the next we are saying is like liquidity providing. So what is liquidity providing? Just a second, sorry. So what happens is in liquidity providing. So like I explained you right now. So what happens in margin trading? Like see, you can see here like there are trade histories. There's volume and all, like all the buy prices and sell prices are listed in the market. Like this is a BTC INR graph. So what happens is like if you want to buy a token, you can see that what is the current orders are, what current orders look like. That like there is a greater volume for 1.8 million than one lesser volume for the above prices. So you can like give a market price to like this is a type of order book. What like happens like you will put a price at what you want to sell, and at that amount the buyer will be matched. Now like you can see there are very less green lines and very more red lines. So what this indicates is like the buyers are less and sellers are more. So what will happen at the point that the every most of the selling part, half of the sellers will be left who will have no uh, okay, what is the order book system? Yeah, well, oh sorry, I will explain it to you like in detail. Just give me a second. Like I will show like a proper example or live example. I will show you. Yeah. So like you can see here like all the coins are listed. If I go to BTC, it's BTC NR. The current price at what it's traded, it's shown here. So this is the order book. So what happens is like when I will go to buy, there is a limit order and a stop limit order. So stop limit order is like similar to a market price. So like I will like uh, yeah, like I can select like there are see you can see here like 1745 426. There are some the volume is 0.08 and it is 0.02. There is very less volume of sellers as compared to buyers. So what I can do is I can click on any of this. So like uh, if I want to sell, this is the price I want to sell at this price. You can select the price from here and how many bitcoins I want to sell. Like I want to sell my 5 bitcoins. Then they will say the total price you will get is this. Like I will get this amount when I will set 5 bitcoins for this amount. So like I selected this price from here. So like then the system will match for the seller. That they will look for the seller who is ready to buy. So you can see that here are all buyers and here are all sellers. So you can see if there is any seller for this price here, they will check, and if they found any seller, they will like order. So like until I get the seller, the order will be listed in the open orders, and as I get the seller, my bitcoins will be transferred, and I will get the INR, and it will then go to the completed orders order section. So the in this way the order will get completed. Like I will give the price and place the order, then order will be in waiting until and unless there is some buyer who is willing to buy at my price. He will I will have to wait, and when it is matched, the order will be placed and the work will be done. In this way, the order book works. So, and in this is a central now. WazirX is a central platform, centralized exchange. So I will show you now how decentralized exchange works. So yeah, I hope Mahesh I was clear. If you have any doubts, you can ask. Yeah. So like this is the so this is how the decentralized exchange looks. So like if I have Ethereum, then if I have Ethereum, I select the Ethereum, and now I want to swap it to some token. So I will go here search for the token, like for example Aave. I want to trade it for Aave. So they will tell now like if I want to, I have to sell one Ethereum, then they will fetch price and say that in exchange of one Ethereum you will get 18.9 for Aave. So how this is calculated, that we will see. Like they have different pools. Okay, I will show the pools here. How this happens. So like This is called as liquidation. So how this happens is like there are various tokens listed here, and these are the pools. So like this is a DAI and USDC pool. This is USDC and Ethereum pool. So like if I go to this pool, you can see like what will happen is like I can put my Ethereum and USDC in the pool, and like me, hundreds of users put the Ethereum and liquid USDC in this. Like if you want to add liquidity, you can click here. So like yeah, like something like this opens, like it opened in next tab. So I have to copy paste the URL. So like something like this opens, then I can add liquidity. Like I have to add a liquidity of USDC and wrap Ethereum. So like they will right. I don't have currently any Ethereum. So like I can say Ethereum, and I have this token. So like I have to add liquidity for it. So like they will check the price. Then I can they will show that what trade I can do here. So like if I want to put one OSQUIT here, then they will tell that one OSQUIT and 0.6 Ethereums, like 0.06 Ethereum. This both will be added to the pool of the liquidity, and I will get interest over it. So like what happens is like there is a pool, hundreds of users will put same in the same way what I'm doing, and it will go in a pool. Pool is a collection of all the liquidity, and what happens is like now as you saw here, if you I want to trade a token, so just a second. Yeah. So like I have Ethereum and now I want this for example. So like I will give one Ethereum for it. So then they will calculate what is the best price and they will say I will give you 30. Now you saw that there I was get the rate there was more. So like and here the rate is less. So what happens is like I will get 13 Ethereums and I will sorry 13 OSQTH and I will give one Ethereum. And what will happen is like the during this trade certain amount of fees will be cut and that fees will be given to the one who provides liquidity. So like how I shown you the how I can provide liquidity. So what will happen if I put the tokens and whenever there will be trades, after that trades I will get a small amount of interest at each and every trade. So you can earn from it. Like it's like a passive earning. Like you put the tokens there, and someone else want to swap and all. After they swap, you can see the fees and all they have expected output. Then price impact, like what minimum after slippage. Like they said that 13.05 will receive after slippage. And what is slippage? There is a network fee and it will be trading fee, which will be cut from the total amount of SQTH I will get, and that amount will be given to the one who is providing the liquidity. So what happens that he will get the interest for keeping the liquidity, and I will get my token swapped. So in this way, the pools and all work. And if I have put any coins in that pool will be shown here so that I can create a pool, or I can also like put money in the pool and all, and whenever I want I can withdraw it. That's the best part. Like there is no deadline expiry that you will have to put it for 2 months, 3 months. It's like whenever you want you can take it. In this way this is the difference between the order book system and liquidation pool, like decentralized action based system. In centralized exchange, you have to wait for your order to be completed. In centralized decentralized exchange, your order will be, you will already have a liquidity pool, and you just want to like trade the token as fast as possible. So this is how it works. Now, one of the more like the DeFi products is like Aave. Yeah. If you have any questions, you can ask me simultaneously. I will try to answer it side by side. Yeah. So like Aave is a Aave is a liquidity pool protocol, like earn interest over borrow assets, and like you can build applications over it. Like how as we saw the market works. Here also you can like borrow assets and all. Like for example, uh, if I want buy BUSD, then you can see the charts and all like at what price it's trading and all. Then total amount borrowed, total APY. APY is like something like what interest you will need to pay over it. Like if I borrow 10 uh, Binance USD now, when I will return it to them, I will need to pay them uh, 10 plus 1.73%, like around 12 rupees to them. Sorry, not 12, 10 point something. So this graphs how to read in detail. Like now, if you see borrower information is shown, borrower APR variable. Now, what this shows is like APR, like how much interest you will need to pay for this. So, like you can see here, like it's shown 0%, 2%, 4.6%. Like you can see at May 8, when you see there, you can see at May 8, it was like 3% point something like that. Yeah, APR is annual premium rate, I think so. Like at a interval of a year, annual means a year, what interest you will get, what percent of interest you will get. It is, I will give you a full form. Uh, Yeah, APR is annual percentage rate. So it's percentage rate, and what is like percentage, how much percent rate, the rate of the token, like how much percent you will get. Like you can see a 6.95% is shown. So what is say that if I put 100 tokens, after a year I will get a total percentage of 6.95%. Like it was the rate, and it changes according to the liquidity pool. Yeah, it defines the profit margin. Yeah, correct, correct, correct. It is like profit margin you will get over it. Now, yeah, this is like supply APR, like how much APR the supplier will be getting. How much supply is there? Like they have total supplied like 14.91 million tokens are supplied, and out of that 5.12 millions are been borrowed. So like borrower is like paying like 1.7% interest. Like if it borrows token worth of 100 rupees, he will be paying like token worth of 101 rupees. But like supplier will get like 0.5%. Like if uh, I have put my liquidity of 100 tokens, when I will take back the tokens after a year of after that rate. So like APY is like at the current time. Like after 2 days, if the APY is like 6%, I will get the tokens back at that same 6%. And the rate is like it depends on at what time you will take back the collateral also. This is how it works. So like you can see here like it's 1.7 for borrower and 0.53 per seller. Like when buyer will buy, he will give 1% extra when he will return. But when supplier is supplying, he gets the reward for supplying it as half of it. And I think half will be the network price which will go to the platform itself. This is how it works. So this is how borrowing and lending works. So like, do you have any doubts? You can ask me. Yeah, this is how liquidity providing and order book is how understood what APR stands. Okay, nice. In this way, we saw how order book system works and how liquidity pool works. Like here also in this image, you can see like each token is total value, TVL is total value locked. So how much money is locked in that pool. Then volume shows like how much transaction is going on. Like at current time, if I send to 10 rupees and you send 5 rupees to your friend. So like total 15 rupees transaction happening, and that's the volume now. Now it's showing like volume 24 hours. So like in 24 hours, how much money is traded on that pool that is shown. So like that is shown here, like how much money is traded, and in volume 7 days, like in 7 days how much is traded, total value locked is how much value is locked, how much money is locked in this pool. Now here you can see like the name of the pool and the percentage they are offering, how much percentage you will get. And the percentage, like it depends on the platform to platform, like how much percentage a platform wants to offer. Like it's for a day, for a week, for a month, for a year. So it totally depends. And maybe this is 0.01% for a month, or this is for a day. Uh, because the APR for a year is like around 7, 10, 15, sometimes goes to 20, 30% also. So in this way, the liquidation pool works. Any questions you have, you can ask me. And any feedbacks you want, you can give me that also. Like what you else you want me to improve in my sessions, what you want to learn in that way. And any questions, like any doubts you have about today's session, you can ask that also. If you want to learn more about any other DeFi project, we can also discuss any other DeFi projects also. Which token coin is reliable? I think the most reliable are the token. Most reliable tokens are stable coins, but they are not to invest. Like you can, what happens is like at any given time in the world, a stable coin, you know what stable coin, we learned today itself, like stable coin is something which has the value of a stable instrument like a US dollar. The price of US dollar is equal to one token, and that token is called a stable coin. And if you see the price at every point, it is very near to $1 every time. It can be 0.9, but it will be always equal to $1. So there is no chance that you will lose your money there. But I don't think so that it's reliable to invest. So what happens, like the price is not increasing, so the value remains safe. So what you can do is like, if you have, you can take one stable coin, then you can take like Ethereum coin or something else like that. And as I saw the liquidity pools, you can put the both coins in liquidity. So what will happen, like the price of Ethereum will change, but the price of stable coin will be same. So after that, when after some time, you will also get interest over it. Like we saw 1%, 2%, 3%, that way you will get interest over it. And when you will remove both the tokens. At that time there will be some price for Ethereum. It might be higher, it might be lower, but for the USDT, as you have gained the interest, the price will be the price of USDT will be above, like it will be higher. Because what will happen is like, at the time when you were adding liquidity you put 5 tokens, but when you will remove it, maybe uh, after getting the interest, the tokens price may, total number of tokens may increase to 6 or 7 or 10, etc., depending on the percentage you will get out of it. And in that way you increase your tokens, and hence the value increases, because each token will have same value, so the number of tokens matter. This might be one kind of stable investment, I can say. But like relying on a single coin or single cryptocurrency is like, I think like it's a stupidity. That's what I think. And like I also don't actively invest in too much of uh, cryptocurrencies, and all. Mostly I'm associated with these DeFi projects and how they work, because the price of the currency will always go and up and down, and don't want to get relied on it. And I want to like earn more interest over the coins and all. That's what I think so. But you are like open for your own imaginations and open for your own decisions. It's your money, it depends on you where you want to put and where you don't want to put. Don't like depend on my saying like do this and do that. uh, do your own research, do what you think is the best, and you will grow your money, hopefully. Yeah, that's it. And any other question you can ask. Other than that, thank you so much for joining. That's it for today. And these are my social handles and all. You can contact me anywhere. You can ask me like, hey, I joined your session, and please help me out with this concept and all, and we can talk over it. What DeFi projects should we keep a close watch on? The projects like I shown you like Uniswap, Aave, SushiSwap, Yearn Finance. Then there are Compound, MakerDAO. These are some of the projects which are performing great in the market now, and you can learn in depth on it. If you want, we can take individual classes on each project, because these projects are that big. I can discuss on each project for around 1 or 2 hour, and it will not be enough. That's the potential of each project, and you can like learn a lot from it. The DeFi world is very huge, and there is very much to learn in it. And you can like contact me here anytime, and we can discuss there also, or we can keep more sessions and over it. Just try to follow me here on the creator, and you will get daily updates, and we will, whenever I will plan the sessions, you can join and you can learn from it. Can you type it in the chat? Yeah. Aave, then Uniswap, then mhm. Then there is Sword, then Compound. Yeah, I think this will do. What is DeFi and Metaverse have in common? Uh, DeFi can be used in Metaverse. That can be common. Like in a Metaverse, you can have your own centralized exchange located in some part, and then you can go over there. You can transact and on. Like each metaverse also has its own cryptocurrencies, sorry, own tokens, not cryptocurrencies, own tokens, and you can buy the token there, and there will be some financial instrument, decentralized financial instruments built over there, and you can trade over it, and you can uh, earn from there itself also. These are some of the examples. Other than that, then metaverse is like virtual world, and decentralized finance is a provides you the instruments of finance which you can y- use. Hope that this 50 minutes of session was helpful for you. You don't have any doubts. If you have any doubts, you can ask in chat itself, or you can connect me over the socials here, and we will like connect and we can talk a lot about it. Like there is the world is huge, big over that we cannot cover it in an hour. So if you want more sessions, you can tell me. I can plan more sessions on decentralized finance, and I can take a small parts like how lending borrowing works, like for an hour, or how the decentralized exchanges work for an hour in that way, or what more projects we can explore. Like we can explore the projects sitting on here. Yeah. Thank you, Supriya. Then I will I will like plan in that way. Then like you can follow me here. So like you will get the updates every time when I will plan anything and I will have the session. So it will be easier for you also. Make sure you follow it for that. So and thank you. So let's end this session here. Thank you so much for joining, and do follow me. And if you want, you can also contact me at my social media here, what it's listed. And thank you so much. Let's end the session here. See you soon. Tomorrow I'm doing the metaverse class. So like there we will be discussing metaverse in detail there. You can join there. And like previously I also done the NFT class, and I have also shown some NFT projects out there, how they work and all. So you can also watch NFT sessions. And before NFT sessions, I have done the sessions which teaches you what is blockchain and how you can make the career out of it, how you can start learning it, and also I started to teach what blockchain is and how it works also. So you can also prefer watching that videos, and in upcoming videos I am planning like covering metaverse gaming and all. So you can also follow me for getting the updates. And thank you so much. Thank you, Mahesh. Thank you, Tanuj. Thank you, Supriya. Thank you all. Take care everyone for joining, and bye.